In just the last 2 years, I went from a broke corporate lawyer to a $20,000 per month trader using 3 simple concepts. But here's the thing. Most traders are still losing money, they're still getting wiped out because they're overcomplicating simple concepts. So in this video, I'm breaking down the complete system that I use to go from $0 a month to $20,000 per month in trading. And in this guide, I'll be covering everything you need to know, from what sessions to trade, what tools to use, and how to do your analysis. So lock in on this video and you'll know how to play the trading game the smart way. When I started, I didn't have the tools available to me to tell me whether something was a bad trade or a good trade. But now I do, starting with, where do I get my setups from? So let me show you exactly where I find my trades every single day. And most traders are actually looking in the complete wrong places. Now, everybody has told you about session opens. Everybody talks about it. It's the best time to trade. But what they're actually missing is the opportunities that print just before the session open. So if we use my little tool right here, which is going to show you when the sessions open and close, you can actually quite clearly see we are already making a strong move before the session even starts. Look at this right here yesterday. During NY, we actually made the beginning of the move just before that session opened. So if you positioned yourself well before that session opened, you would have been in the right direction and able to catch the move before it left without you. So that gives us step number 1, which is figuring out the good times to actually trade. And yes, session opens are good, but actually trading the hour or so before and the hour or so afterwards is going to give you a lot more setups and a lot better win rate. By the way, for those of you wondering, the indicator I was using right here is called Market Sessions by Leviathan. All it does is tell you when the sessions open and close. But here's where most beginner traders get destroyed, because they think that any setup is a good setup without qualifying the setup before they take it. Now, there's a few things that make a good trade worth taking, and this is what I call my TRLS trade checklist. So before I enter into any position, I need to see these 3 things. First of all, I need a clear idea on direction. So the market needs to be telling me, okay, are we either trending, are we consolidating, or are we trending in the opposite direction? Which one are we doing? Now, once we have that, we need to understand the next one, which is going to be liquidity. Now, this is probably the most important one. Liquidity is essentially what allows the market to move. So before you enter into any position, you need to make sure that liquidity has been grabbed in the opposite direction. Now, I have in-depth videos in my channel about how to actually spot liquidity, how to identify it and trade it correctly. But the key principle for this video is, if you're going to be taking buys, you need to make sure the chart has grabbed liquidity from below, i.e. a bottom wick like this. And if you're going to be taking sells, you need to see that we've grabbed liquidity from above, i.e. a top wick like this. Now, once we understand that, we need our third and final thing to be present, and that is going to be volume. Now, volume is essentially how much interest there is in the market right now, how much the market is moving, so how many orders are being placed. And this is going to actually result in higher probability trades. If you're trading during periods of low volume such as this, the market is going to start to consolidate and move very poorly, and a lot of the time actually not follow our technical analysis. So we need to be waiting for the times with optimum value, and like I said earlier, that is going to be from about an hour before London or New York open to about an hour and a bit afterwards. Now, once you have these 3 things, we can actually add one more final thing, which is our multi-time frame analysis. Now, what that actually means is, are all of the time frames aligned? Does every single time frame complement the idea behind our trade? So once you build a narrative on the higher time frames, let's say the weekly, the daily, the 4-hour, that's going to give you an overall general idea of direction. But now you need to see if the lower and middle time frames actually support that. So does the 1 hour and the 30-minute correlate with your idea? And then after that, does the 5 and the 15? Now, if this lines up, then you're absolutely perfect to go. And the best way to spot this is by using market structure. So you can see if we're looking at a trade on the 1 hour here, let's say we're maybe bullish and we're looking at some buys to continue up right here. Well, when we drop to the 5-minute, if we start to see some bearish price action, maybe that's not aligning with our trade, and we essentially want to be waiting for the price action to correct itself like this, making another higher high here. That would be when our entry is valid, because then essentially every single time frame is aligning. Now, it's important to remember the higher time frame do take precedence. So if you do have a 1 hour that's actually valid and then maybe the 5 minutes not, it's not going to be too big of a problem, but you should probably be waiting for every single time frame to align. Now, the next tool which separates profitable traders from everyone else is going to be risk management. Now, essentially risk management is understanding how much we are going to place on each position, stopping us from actually either risking too much or risking too little so that we actually make no money if the trade wins. Because essentially, one way or the other, it's going to be a problem. We want to find a healthy gap in the middle. Now, the way we're going to do that is dependent on what we are trading here. If you're on a prop firm, you want to be trading with a maximum of 1% risk, especially if it's your first prop, because essentially you want to try and get that one passed and not hit your daily drawdown. Once you have that, you can understand also if you're trading a live account, we want to be trading somewhere between 1 to 5% risk. Now, since there's no daily drawdown or anything like that, you can be a little bit more aggressive, but realistically, it's good to stay around that 1 to 5% mark. This way, we're going to essentially allow compound growth to take place. Once we start getting wins, we're going to see the compounding taking place, and you're going to see account growth like this without having too small of a curve or too steep of a curve that then results in us blowing the account if we're over risking. But how do you actually go ahead and calculate risk? Well, the best way you can possibly do it if you're new is by heading over to a forex lot size calculator. Just type in risk calculator forex on Google like this, and you can go ahead and actually find one right here. Type in your stop loss, take profit. It's extremely simple to use. And once you have it, it's going to tell you exactly what lot size you should be using down here in order to actually risk the appropriate amount. But eventually what's going to happen is that becomes common knowledge, and you can actually start to figure out what trade sizes you're going to be taking on each position. You can work it out mathematically in your head. But yeah, once you understand the decent amount to trade, that is going to be massively important. Otherwise, you're going to be blowing accounts way too fast or making money way too slow. But remember, the system is only half the battle, right? Here's the execution framework that actually makes money. Now, before you get into a position, you need to have everything drawn out, because as you know, the moment you get into a position and the money's on the line, bang, the emotions start to take over. You can stop thinking clearly, and essentially your analysis just goes haywire. So what you want to do before you get into a trade is make sure you have these 3 things as a minimum set out. So first of all, you want to have your stop loss level. Now, essentially what you want to be doing with your stop loss is placing it below structure points. So essentially below candle lows, below lower highs that have been created, or below liquidity when it has been grabbed. So for example, let's say we took a trade like this. You'd want to be placing your stops below this liquidity. This is also a higher low that we made right here. So there's no reason after we come up and enter here for price to come back down and do something like this. If it did, our trade would be invalid. Remember, the point with a stop loss is wherever the trade becomes invalid, that is where our stop loss goes. It's an invalidation point. Now, the next one you need to understand is you need to have already your take profit marked out. The reason being, if you don't have it marked out, you're either going to close too early, or you're going to go ahead and actually try and hold on for too long, which is going to be greed, and you're going to forget all of your analysis. Now, your TP level should be based off of previous areas of rejection. We can see right here, price rejected at this area quite strongly before. It also rejected at this area here, and essentially has rejected right here as well. But the main level we're looking at right now for rejections is this area right here at 54. Now, this is where our TP is going to be, because logically, let's say we were in this position right here, you actually got into a position and it rejected off of it. But if you were trying to hold on for a specific risk to reward, like most traders stupidly do, you actually would have ended up getting cooked and then ending up hitting your stop loss because of that. So we're actually going to let the market decide where our stop loss and take profit go. At this rejection area, it would be stupid to hold past it, because in the past, so many times we've pushed back. So that's that. But then the next thing that most people forget, they need to have a break-even point marked out. Now, a break-even point is essentially going to be, where are we actually going to move our stop loss to break even? Now, earlier I just marked out this minor level right here, and you can see in the past that actually when we haven't rejected at this level, we've rejected at this area too in the past once, twice, and 3 times. So what that means is price could quite easily do something like this, come up to this level, and then immediately reverse on us. Now, if we understand that and we know that's a possibility, why the hell would we not preserve our capital? You want to essentially be preserving your capital and maintaining as low a risk as possible. So once we know we're hitting a rejection area, we're going to go ahead and move our stop loss to break even. And if you have that marked out before the trade, it's way easier for you to go ahead and do it, because essentially now your analysis is telling you what to do and not your intuition. If you don't do that before the trade, you're going to be going, oh, I can hold on, I don't want to get hit break even, or you're going to go break even too early because you get scared, and essentially go ahead and ruin your trade. Now, most traders mess up right here, even when they have the perfect setup, because of these 2 common executional errors. First of all, like I said, they get into the position and they get scared. They see a number of profit on the line or some drawdown, and they want to go ahead and close the trade irrationally. Remember, we are actually trying to remove any emotionality from the trade. So what we're going to do is trust our analysis, have our trade idea written out before the trade, and that way you understand that you're allowing structure and the market itself to make the decisions and not you. And the second mistake that people use is they actually go ahead and try and get too greedy. And they try and hold on, or they let their ego take over and try and hold on for a 2-hour hour so they can post it on social media. Again, we are letting the market decide when we get in and out of the trade. And that actually ends up removing any personal responsibility from yourself. So if you say to yourself, the market's telling me this, and you get out of the trade and it goes even further, then it's not your fault, and vice versa. If you don't get out of the trade, the market gave you no reason to, then again, it's not your fault. So let me show you another example of this system saving me from a losing trade, because the other day I entered into some sales on a rebreak of this low down here. Now, what was actually going on in my head was I expected a push down towards the bottom of the next range, which was all the way down here. However, using the same system I just taught you, I understood there was rejection areas from down here in the past, around this area. Now, what ended up actually happening was my TP was all the way down here, and my break-even level was here. And you can see what immediately happened. I pushed my stops to break even, but again, there was no reason for me to close the position. And as you can see, we ended up coming and hitting break even, and then immediately after that, what happened was we saw an extended push up, which would have taken my stop loss and would have been very, very detrimental to my position. So understanding that I had my analysis written out before, I had my break-even point already set, that saved me from a losing position. Now, here's the advanced part that actually took me from a good trader to a great trader. What you can actually understand is when you're in a position, even if it's from a 1-hour trade or a 30-minute trade, you can understand the lower time frames in order to manage your positions. Now, in this trade right here, actually what I went ahead and did, instead of letting that hit my break even like here, like I said, is I was watching the lower time frame 5-minute market structure. Now, you can see on this candle right here, on this market structure, we started to consolidate over and over. But again, there was still bearish price action from above, so I had no reason to close. However, whilst I was watching this structure, what we ended up going and doing was making some bullish market structure. As you can see here, we made a higher high followed by a higher low. So actually what I did at this point was I ended up closing on my break-even point because I saw a retest of that level and then a rejection after making bullish structure. And understanding that lower time frame structure whilst in a position can be extremely instrumental in you taking profit when you should and essentially getting out of a position also when you should. So I actually look at anything from the 15-minute time frame all the way down to the 1-minute time frame when doing this, because you can see quite clearly when you get some market structure shifts in the opposite direction, that actually tends to lead to the higher time frame shifts as well. This price right here was extremely bearish on the 1 minute. And actually what ends up coming and happening is we make bullish structure right here, make a higher high, higher low, another higher high. And then immediately we follow and do the exact same thing and continue to make structure. So if somehow you were in a position from up here, let's say you got in a position on the 1 hour like this, well, actually what you would have known to do if you were looking at that lower time frame as well, is you could have actually identified that structure shift and then either obviously gone break even, but trailed your stops down maybe to a break of this high here, maybe to a break of this high here as we made it, and essentially secured some profit. Or you could have got out of the trade altogether, understanding we might be turning against our own direction. But this is the final part that actually took me and turned everything around in my trading. And this is your mindset and discipline. Now, a lot of traders, when they're managing positions, are essentially thinking, I have to make the perfect decision. And what I'm here to tell you is that's completely wrong. I'll give you an example of this. Most traders go ahead and when they're managing a trade, let's say they close in profit and then it continues running, right? It keeps going. Most traders feel bad because they essentially think, oh no, I could have got more profit out of the market. Same as when people close in a loss to manage their position and then it reverses and goes back into profit. Now, during this time, you had no more information. After the trade, yes, you can see it reversed, but the mindset shift that I actually made that allowed me to be so stoic when I was closing a trade in profit or in losses, when you are making this decision, you have no further information. So you are essentially making a decision with the best knowledge you have at the time. So you're doing the best you can at the time. Now, there's no trader who can see into the future. If they could, they'd be a trillionaire. So when you are making that decision, just remember you made it for a reason. Something in the market was telling you that you made that decision for a reason. And if that's due to your technical analysis, then that is perfect. You should be doing that every time and following what your system tells you to do, i.e. closing when there's a market structure shift or a no bottom wick candle or anything like that. But if you made that decision out of greed or fear, that's when we have a problem, right? But as long as you are making that decision from something the market is telling you, you are extremely good to keep doing that, because in the long run, what's actually going to go ahead is you are going to actually seriously save yourself a lot of money. And as well as that, the thing that people don't actually think about is every single time this happens and you take a trade and you close and then it would have been better to hold, you notice that. But when you take a position, let's say you're in a position right here, a buy position right here, and you actually close it perfectly, no one really remembers those times because it's not a bad thing. We're more likely to remember the bad memories than the good. So actually, a lot of the times what happens is you make the right closure and essentially you would have actually lost money if you didn't close. But when we actually don't do that and we take technically the wrong decision, you always remember it. But this is called cognitive bias, and you need to just remember that in the long run, the decisions you're making that are based from your data and your statistics behind your setup are always the right decision. So here is your complete implementation guide to copy this exact system. First of all, session selection. Make sure you're trading during a time where there is volume and there is essentially pure price action. As well as that, make sure the session you're trading actually works for your personal situation. You shouldn't be staying up till 3 a.m. to trade a specific session. One that is comfortable for you, you can do when you're not at work and you're essentially focused in trading is ideal. Step number 2 is setup qualification. You want to be going ahead and figuring out what actually qualifies as an A+ setup for you and essentially writing these down and making sure they are valid before you take them. Now you can use the TRLS trade checklist for this. This is essentially some criteria that have to be present outside of the setup before you actually take a position. And this was direction, liquidity, and volume. Now, after that, we need to ensure that we're risking appropriately, okay? Use a risk calculator or do it in your head, but risk between 1% and 2% on a prop firm and between 1% and 5% on your live account. After that, we need to be looking at entry management. So do you have your stop loss, your take profit, and your break-even level set before the trade? If so, then we are good to go. It's also good to have an entry plan written down so you understand what the idea behind your trade was and what would actually need to happen for the market to shift in the opposite direction so that you know when to manage. 6 is going to be disciplined execution. So once you have that entry management system that I just spoke about, you're going to follow that completely. Make sure you understand what is going to be good with the trade and what is going to be when the trade is going wrong. So what is printing on price that's going to tell you need to get out. And essentially understand that your take profit and your stop loss are there for a reason. 7 is going to be in-trade management, which is essentially spotting the things that means the trade's in the wrong direction. For example, that market structure shift, that rejection off of a specific level, or that no bottom wick candle. And finally is going to be your mindset shift. Shift away from trying to achieve perfection and make the perfect decision, and go ahead and actually understand that you are making the best decision that you possibly can at the time that you're in the trade. So don't feel upset if you make technically what you think is the wrong decision. So there is the complete system that took me from a broke lawyer to $20,000 a month. The complete system, the execution, every single detail. Now, most people will watch this, get excited, and then never actually use it. Don't be one of those people. This system actually works, but only if you use it. If you want me to personally walk you through this system and essentially take you through every single step hand in hand, then I'm opening 5 slots for my one-on-one mentorship. I'm going to be taking you through every single detail. The system I just showed you, as well as the advanced entries and the advanced concepts that I couldn't talk through in this video, literally everything from A to Z to become profitable from being unprofitable. And if you're not ready for the mentorship yet, then I've dropped a free training down below. There's a link right there. This training alone could change your trading forever. But remember, there's only 5 mentorship slots available. The applications end next week, and once they are gone, they are completely gone. So if you truly want this, you truly want to become profitable, make sure you click the link down below, because when they're gone, they're gone.